Hello and welcome to Finextra. I'm Emily Haller and I'm here with Dheeraj Ahluwalia of MyPinPad. And we're at Money 2020 Europe in Copenhagen. Thank you for joining me.
Thank you, Emily, for having me over.
So what's digital security?
Well, the whole concept of security is actually becoming the center stage for discussion today, both in the payments as well as in the financial services industry. Every 22 seconds there's a data breach globally in the world. Last year there were over 758 million data breaches. Digital security is all about how do you prevent a fraud, or how do you, when someone enters their card details for a payment authorization or their PIN number, how do you avoid that getting compromised, or their password. And if you look at over the last 5 years, fraud has been on the rise. E-commerce and digital commerce are growing double digit. And with the advent of mobile devices, it becomes even more challenging for a lot of IT departments and technology companies to really protect and make sure that the data that is entered through multiple formats of devices, whether it's a simple mobile phone to an iPad or another handheld device, is secure, transmitted securely, and not compromised at any point throughout that transaction, whether it be initiated at a merchant or a retailer or a bank. And that all put together is currently the challenge of digital security.
What would you say the industry challenges are around authentication through mobile?
Well, if you look at what is happening today, whenever there is so UK just celebrated the 10 years anniversary for chip and PIN, and it's been an incredible journey, and it's a classic case study of how a simple authentication element as in PIN at a point of sale has brought down fraud in a significant way. When you look at the same thing, there are technologies today that are emerging in terms of trying to do a similar thing when the card is not present, i.e. through a mobile. There's payment by selfie, there's biometrics, and there is a simple technology where you can just enter PIN and authenticate yourself. Fraud has been on the increase double digit. It actually outpaced card sales last year by 26%. The online card sales, digital card sales, was outpaced by the digital fraud on mobile, 26%. Of all the fraud in the world today, 25% is actually from card not present. So again, as e-commerce and m-commerce grows, this will also grow proportionately unless we figure out ways of really authenticating a customer through the mobile interaction in a secure manner without really having to make the customer experience so difficult that he or she abandons the transaction. Today, globally, depending on which country you're looking at, customers abandon anywhere from 4.5% to 12% of all transactions because of password-related issues. And an average customer today who's very active on the mobile has 8 different passwords and multiple PIN and user IDs. And it's very difficult, and you can't expect a customer to really be remembering all those. So on one end you've got the user experience, which today consists of some sort of a static and dynamic sort of information that you have to give: your mother's maiden name, your first high school you went to, the color of your car, whatever it may be, along with a dynamic thing where it could be a one-time password that you get through your mobile phone. If it's not the same mobile phone that you registered when you first started banking, it creates challenges, and you first then have to go back and register a mobile phone. Or if you're traveling and roaming, you may have delays in getting that OTP. So there's a lot of issues with the current process. It's not very customer friendly. A simple solution would be to be able to take the same PIN that we use at a point of sale and enter it through a mobile in a very secure manner without compromising security and enabling the authentication both for the customer and the payment enablement. That is at the cusp of something that's going to take off in a big way. And that's at the heart of the debate, balancing security with customer experience, and it's something that is very reliable and not foolproof, and not something that cannot be compromised. And that's at the heart of the authentication debate as well as the security debate today.
And what are the authentication and security challenges for banks?
Well, the challenges for banks are, number one, they abandon a lot of the transactions. The customers abandon transactions today, like I mentioned earlier, anywhere from 6 to 4.5 to 12%. The other challenge is that there's a lot of chargebacks that end up happening if the payment ecosystem is not very secure, because the customer tends to dispute the transactions. It costs banks anywhere from $30 up to $100 per chargeback to really investigate. In UK alone, the average value of a chargeback is close to £78. So again, a very expensive proposition for the banks. They have staff that actually full-time manage and administer chargebacks. There are costs associated with failed transactions. The merchant suffers if the bank does not have a very good ecosystem that's supporting the merchant. The merchant ends up having either a failed transaction on their end, or has to make 8 sales on a 30% gross margin to make up for one fraudulent sale if the ecosystem is not fully secure end to end. So those are some of the challenges. They translate into a huge commercial impact, both on the side of a merchant and on the side of an issuer, as well as the whole consumer confidence in the brand, either with the merchant or with the issuer. If a customer once has a bad experience with a brand, whether it's the card that they issued or whether it's a merchant through which they registered a card or did an online payment transaction, they lose confidence, and that has multiple effects in terms of lost sales in the future. For a merchant as well, a lot of merchants typically have different algorithms where they trigger transactions that could be suspectful in terms of fraudulent transactions, and on average globally merchants turn away about 2.6% of sales. And if you actually look at it, study has shown that only 0.9% of that is actual fraudulent sales. So there's about 1.5% of transactions, which is what we call the fraud sales gap, which is false positives that the merchants are really turning away, and that's business that they could have had to their bottom line. More volume is good for the merchant, is good for the acquirer, is good for the issuer, i.e. the banks. And for banks, it creates a lot of stickiness and payments velocity if the experience is simple and straightforward, and one that a customer trusts, so that he can come on and repeatedly use and adopt mobile banking and not continue to rely on going into a banking center or going to an ATM to do their transactions, or at best do an online transaction. So those are some of the key issues and challenges around mobile payments. And if you have solutions that are foolproof, that give customer the confidence to be able to simply authenticate themselves and enable a payment through a mobile, i.e. using a PIN or a selfie or something that is a combination of one of these emerging technologies, that I think would be something that the customers would really take on, and it would propel and accelerate the current digital adoption that we're seeing on mobile.
Thank you very much.
Thank you. It was a pleasure being here.
And thank you for watching.